I'm Danielle Hale, Chief Economist at Realtor.com. As summer temps sizzle, here's what you need to know. New GDP data measured slightly above trend economic growth in the second quarter, a pickup from the first quarter. This improvement is a bit surprising given other recent trends. The labor market continues to moderate, with both job growth slowing and unemployment ticking up in June to 4.1%, a level not seen since November 2021. Further, inflation continued to moderate, with consumer prices actually declining in June as annual inflation dipped. The Fed meets later in July, and while a rate cut at this meeting is unlikely, market expectations for a cut in September are nearly unanimous. It would be uncharacteristic for the Fed not to acknowledge this likelihood in July. The Fed usually signals its moves before making them to avoid market surprises. But the market isn't waiting for the Fed. In June, projections implied that the Fed anticipated just one rate cut by year's end, but the market has now priced in 3. This optimism has helped interest rates move slightly lower, including mortgage rates, which are now in the high 6% range. Despite improvement, rates in this range continue to challenge home buyers. Existing home sales slipped in June to a 6-month low, as the median sales price notched a new record high. Meanwhile, new home sales also dipped, and pending home sales have struggled in recent months. A recent Realtor.com study by Hannah Jones suggests that investors too have pulled back on buying activity. But the shallower pullback has propelled investor buyers to a new high share of market activity. Against this backdrop, the Realtor.com June Housing Trends Report by Ralph McLaughlin showed that the number of homes for sale climbed nationwide and in all 50 of the largest metros. The rise was due not only to more homeowner sellers, but also slightly longer time on market, a helpful trend for buyers who now have a bit more time to think through their buying decision. Still, high costs have many movers choosing to rent instead of buy. Jai Shu found that even though rents fell for an 11th month in June, they are up by more than 21% or $300 over the last 5 years, and Florida markets like Tampa led the increase. This is likely one reason why many of the top 10 rental markets identified by Realtor.com in recent research are in southern cities outside of Florida. Renters looking to balance affordability, economic opportunity, and short commutes should check out these markets like number 1 Austin, Texas. Finally, as affordability continues to drive housing activity, the summer 2024 Wall Street Journal Realtor.com housing market ranking found that Midwestern markets stand out in this regard and for their climate resilience. On the luxury side of the market, Nashville, Tennessee ranked number 1. You'll find all the details, including our full reports and housing data for download, at Realtor.com/research. You can also follow us on X, formerly Twitter, for real-time updates.